Shares of Realogy, meantime, soaring today after reporting a record quarter, announcing a $300 million share stock buyback. As the parent company of Coldwell Banker, Sotheby's, and Corcoran, Realogy's brokers were involved in nearly 17% of all U.S. home sales in the last quarter. Will the momentum continue in 2021? Into 2022, I should say, as rates rise and the future of the housing market looks less clear. Joining us now is Ryan Schneider, the president and CEO of Realogy. Ryan, great to have you with us.
Melissa, thank you so much for having me.
Lost track of the years because 2021 was such a crazy housing market year. Ryan, what does 2022, hold, especially as we're looking at rising rates?
Well, for Realogy, we're real excited with our momentum going into 2022. We earned over $900 million of EBITDA last year, $550+ million of free cash flow, and gained about 100 basis points in market share. So we're excited to take that momentum into the year. Rates have been ticking up a bit, as you mentioned, but so far this year, we haven't actually seen that affect demand yet. But part of that's because, demand has just been outpacing supply pretty substantially in housing. And we haven't seen that slow down, at least for the first 6 weeks of the year.
So given the tight market conditions in terms of inventory, Ryan, how will home prices hold up? Usually when rates rise, price has to come down. The affordability has to be a certain point for the buyer on a monthly basis. So how does that factor in this year, given the dynamics of supply and demand?
Yeah, we don't see price going down this year, Melissa. We frankly see price continuing to go up, again, partly because of that demand and supply mismatch right now. And it's shown up so far in the numbers for the first 6 weeks of the year. That said, we also, though, see continued strength in the units of the housing market. For about a decade, we were stuck between 5 and 5.5 million units of housing kind of sales here in the U.S. It's popped up to around 6 million in the last couple of years. We think that'll take a little bit of a step back, but we'll still be above what it was for the previous decade. That's good for us with our leading market share, and we're obviously rooting for our builder friends to build as many houses as possible.
Supply chain issues are posing a little bit of a problem for them, Ryan, and I'm wondering also if the entrance or the continued entries of investors into the market make it difficult for home buyers and propping up prices. The existing home numbers had an interesting stat: 22% are investors in the market. So what sort of competition is that providing home buyers?
Well, it's a very segmented thing. And if you go at it from the Realogy perspective, you mentioned some of our great brands, Sotheby's International Realty, Corcoran, Coldwell Banker. We're the leading player in luxury. And obviously in luxury, you're not running into some of the institutional buyers. But the place where I think the market's really just the toughest is the entry-level buyer. That's where the supply is the lowest out there in the country. That's where the single-family rental companies are a competitor to them. And bluntly, that's also where the increase in rates makes the biggest difference, given how the vast majority of those people, use mortgages, whereas a lot of luxury buyers actually buy with cash. So of all the segments of the market, that entry-level one is the one that is both the toughest and that we worry about the most as we roll here into 2022.
In terms of luxury, Ryan, which markets are the hottest at this point? You've got a bird's eye view across the country.
Yeah, so two I'll call out. One, Florida has been very, very strong across the board, including luxury, but even in kind of the premium, middle market part of Florida. And then New York City has had a great comeback. By far the toughest market hit by COVID, the last market to come back, but it's really had a strong last few months. And even January, we saw contracts up versus December for new contracts for purchases. And usually in January, contracts are down about 20% versus December. So, New York's a great new comeback story. Florida has been on fire for about 18 months, and that's one of our biggest markets and has been part of our share growth and economic success.